Orient Technologies that reported numbers as well. Overall, my colleague, if you see, did speak to the management because the revenues have jumped around 50%. Profits have surged 62%. However, the margins have remained flat. Rusha Somaya caught up with Ajay Sawant, who's the chairman and managing director at Orient Technologies, who spoke to us about the quarter gone by and the growth outlook going ahead. Let's listen in to a chunk of that conversation.
From an Orient perspective, we have done exceptionally well in Q2. Our revenue from operations has moved from 148.84 in Q1 to now 223.14 in Q2, which has shown growth of 49.36%. And if you compare this on year growth, it is coming out to be 49.92%, which is approximately 50% growth. From an Ebitda perspective, if you see, our Q1 was around 13.65%, vis-a-vis with in Q2 we have done 20.71%, which shows that our year-on-year growth of around 47.63%, and our Y-on-Y, if I have to see the numbers, it's around 50%. PAT growth, if you consider it, it's coming out to be around 62.54%, vis-a-vis on Q numbers is around 62.20%. So exceptionally well results as far as the numbers goes. Secondly, we have declared 18% interim dividend for our investors, and I think we'll be doing really well in coming times as well.
Definitely, for sure. That's going to be great for the company, I bet. But let's move on to what kind of margins are we looking forward to? Currently at around 9.3% on a quarter-on-quarter basis. But what kind of, say, short-term target can an investor expect for FY25 in terms of margins?
So in FY25, we are planning to get into a double-digit percentage margin. Currently, we are working on towards it. We have to get into more of operational efficiency in this, and next 4-5 months we'll be working on that, and hopefully we'll be touching somewhere into 9.5 to 10% within that range.
9.5% for FY25, and what could be the potential levers for this?
So ideally it should be the operational efficiency.
Okay, operational efficiency. Okay, got that. Let's move on to the segmental revenue split. While we have almost 52% of your revenue coming from the mid-markets, which largely includes real estate, infrastructure, logistics, etc. And then, followed by BFSI, government and PSU, just to give our viewers a kind of brief outlook over here. What kind of growth do you expect in terms of each geography for FY25, and which one will be the best performing one for FY25?
In FY25, I feel the SMB or the mid-market will continue to grow. So that's the business model which is contributing towards more than half of our business, and it's going to grow. But we are also targeting government and PSUs along with the BFSI. So BFSI is the major focus along with government and PSU after SMB, of course, or the mid-market that we call it.
What kind of margins are there in terms of mid-market and BFSI currently, if you can give us a range?
Currently, the mid-market is giving us a double-digit percentage EBITDA, whereas BFSI and government is slightly pulling it down to around 8 to 9%. Which is averaging it around 9.3% as of H1. H2, we are trying to improve on that, but that's where the business model will keep on evolving, and we'll be focusing more and more on BFSI to increase our margins and the revenue perspective.
But Mr. Sawant, hasn't BFSI been under pressure for IT companies largely, say, in last a year or two, and then, the economic update which we all know about in the US? Won't that impact the BFSI, because largely BFSI is there in the US, if I'm not wrong?
Currently, we are targeting all the Indian banks and the Indian insurance company, whereby we are just making sure that the margins will improve. They are in a great need. PSU banks has been just materialized, and they have consolidated their lot of small bank into the PSU banks, and we have aligned ourselves with the PSB Alliance. which is a constitution of around 12 PSU banks, and we have been selected as one of the cloud service provider for them. So that kind of a model will help us to grow our BFSI revenue on cloud very much.
Okay, so Indian banks is what you're targeting at. Got that. Changing tracks from geographical split to the vertical split, we have IT infrastructure products and services which contributes around 69% of the revenue, especially in the second quarter, and the margins over there came in at about 12.5% versus 15.5% in the last quarter. What led to this dip in margins for this segment from which we gain most of our revenues?
Okay, so my one of the LOB, which is the IT infrastructure products and solutions, which constitutes to two business units. One is data center solutions, and another is end user computing. As we all know, that end user computing is becoming very competitive world. Though the business is growing, the revenue is growing in this segment. Unfortunately, the margins are dipping, and that's the clear scenario. You must have seen that the overall margin from this LOB has pushed from 15% to 12%. Yes, this is a competitive world. We need to be there as far as the visibility goes, as far as the acquisition of the customers, getting new logo. So this business unit is definitely important as far as getting new logo for me, getting visibility in front of the customers. So we look forward for that as a strategic line of business. Yes, of course, the margins are going to get deeper in this particular business unit, but as we grow in revenue, it will compensate the overall EBITDA margins on that.
So still more time for margins to recover in this space is what you're suggesting?
Yes, so we can still do better in this view, considering the margins are going to be competitive.
Right. Okay, fine. Let's move on to the order book pipeline. Since we don't have an information about what kind of order book does the company have, can you give us a number?
Sure. So current my order book is 165 crore for H2, and we'll be billing most of this in Q3 and Q4.
And what kind of growth has been observed in this order book which you just mentioned?
Currently, it is more than 25 to 27% growth, which we are observing on quarter on the order book sides.
And likely to be executed in the second half of this year?
Yes, Q3 and Q4.
No deal cancellation or pauses from the clients?
So far, nothing.
Okay, that's great. Fine. Okay, let's move on to the kind of employee matrix that we have. Can you give us a number on the employee addition observed in the second quarter? I believe as on 30th September, we had around 1517 kind of base that we had. The addition and the attrition number is what I'm looking at.
Okay. So current attrition in our organization is around 15 to 17%. So that's one of the things which is we are trying to control. And every IT industry is facing this challenge of attrition. It's as I said, it's a very competitive and skill-based business. We need to make sure that the retention is very much important compared to getting new employees. And as I said, that we'll be working more on operational efficiencies within the organization. We are trying to make sure that we are managing the similar kind of employee strength in the next 2 quarters.
Right. Okay, got that, Mr. Sawant. Let's move our track to talking about shareholder payout, because I think that's one of the most important factors which an investor must be looking forward to. You mentioned earlier that you gave 18% dividend in this quarter. What kind of shareholder payout in, say, a longer term for 2 to 3 years are you looking forward to?
Actually, forward-looking numbers we do not disclose yet, and we are very new to the listing territory. So currently, we have never disclosed any forward-looking numbers for even shareholders to understand. One thing I can proudly say is that this company has been giving dividend every year. Okay, so that's a track record we have, and it's a proven track record. Every year we give some interim dividend, and end of the year we analyze the entire situation and then do the final dividend.
Right. Got that. Thank you, Mr. Sawant, for joining us. It's always a pleasure speaking with you, but because of crunch of time, we'll have to wrap this conversation. Talking about the stock performance, well, the stock is up around 27% from its listing on 30th August. But that's it, our viewers from Orient Technologies. Thank you for watching us today.